of two halves. I think it's important to remember the context of the first half. I mean, if you recall in sort of February, March of last year, it did appear that the world financial system was in real difficulty and potentially facing a collapse. And by the half year, that scenario had changed. And so the second half was much more stable from a financial markets perspective. So we saw equities rising significantly, we saw interest rates stable, and the rand reasonably stable against a basket of foreign currencies. So in the second half, we saw stability in markets, and we saw the impact of the operational changes we made as regards persistency starting to take effect.
How about some wrong decisions you may have taken in the first half? And of course, you did have some hedging strategies that backfired and meant you didn't really capitalize on the upswing in the markets.
Well, we didn't capitalize to the extent that we could have. We still had quite significant equity exposure, which we capitalized on. But I don't think it was a mistake. I mean, I think the point we're making is that the cutting of our equity exposures was in line with our strategy. What we can be questioned on is the timing of the cutting of those exposures to equity. And I think in the context of what was happening at the time, we followed a pre-agreed strategy. So if markets fell through certain levels, we had agreed with the board that we would cut positions, and that's what we did. So it was a strategy executed in accordance with a pre-agreed framework.
Perhaps take us through some of the strategic review of the business, what accomplishments you've made there, and what still needs to be fixed.
The strategic review of the business really confirmed three things: that we needed to restructure the business, particularly the insurance business, so that we could get end-to-end accountability for management of the customer and management of profitability. It confirmed that the de-risking or management of the balance sheet was the appropriate approach, and that what we were doing was in line with global best practice. It confirmed the need to really address the persistency issue, and it confirmed that the measures we had taken and are still taking are the right measures. And we've gone ahead and implemented all of those things. So if we deal with them individually, the individual life team, the retail insurance team has taken very, very swift action and effective action to address the persistency issue. And you can see from the financials that there were no further adjustments required in the second half to our assumptions in respect to the major product lines. And it would appear that that persistency is starting to track below what we expected it to track. If you look at the balance sheet, we've de-risked the balance sheet. We don't have to de-risk the balance sheet any further. So the reduction in equity exposure was actually in line with it achieved the amount of equity exposure that we feel is appropriate for our business to hold. So all in all, I think an enormous amount of progress was made in the second half.
Stanlib's performance over the year. We have assets under management 300 billion, down from 312 billion, and this is in a period where we saw the equity markets rising quite strongly. Of course, you do have a new investment team there, Stuart Ryder appointed, Tabard Lottie heading up Stanlib. How are we going to turn that around?
Look, I think we saw some outflows. We also had a lot of inflows. The net position was slightly down for the year. And we have had question marks raised about investment performance. But if you look at the business overall, the performance hasn't been bad. There are pockets of bad performance, and that statement I think is borne out by the fact that we won more Raging Bull awards than any other house in South Africa. I mean, it's one of those peculiar things. I think when Rex Tomlinson and Stuart Ryder went into Stanlib last year, they conducted a thorough review of all the processes. They've strengthened all the processes, the investment processes, the research processes, the strategic asset allocation processes, the tactical asset allocation processes have all been strengthened by Rex and Stuart, and they've significantly broadened the experience of the team. So we've got Thabo, as you say, coming on board. We've got Stuart in as the CIO. We've made 4 very senior portfolio manager appointments. So I think that an enormous amount was done very, very quickly, and we're starting to see the benefits of those changes.
Africa, a couple of deals there, CFC deal in Kenya, United Funeral Insurance Namibia, Liberty Botswana. Progress on your African strategy here?
I think we've we've made quite significant progress. If you think back to 2006, we didn't have an African presence at all. We're now in Namibia, Botswana, Kenya, Uganda, Nigeria, Lesotho, Swaziland. So we've certainly created the presence on the back of Standard Bank's footprint in Africa. You will see that the business actually generated a profit. Last year it made a small loss of R1 million, made a profit of nearly 30 million rand this year. And the big win last year was the acquisition of CFC, the non-banking interests of CFC in Kenya. So we now have the full wealth suite, rather like we've got in South Africa, in Kenya, and we'll be working with the bank closely to get that business firing on all cylinders.
What do you see as the risks this year? Of course, there is talk of a double-dip recession, which may or may not happen. Equity markets a little more volatile.
Look, I think it's obviously very difficult to call the future. We've de-risked the balance sheet, so we've got less exposure to unpredictable markets. We've got the volumes. We've got the machine that can sell. It sells. We've taken the remedial action on persistency. That's starting to work. So we've just got to keep doing what we started doing last year. We've just got to get the basics right, and the business will work. So, the market may do some funny things, but that doesn't matter. We will continue to do what we set out to do, which is to fix some of the core operational parts of the business, and that will bear fruit, whether it's in the next year or 18 months. I don't know.